What if turning $0 into $10,000 isn't a fantasy, but a clear step-by-step plan that anyone can follow? You're about to find out exactly how. Before we dive in, make sure you hit that subscribe button for Simple Stroke Official and ring the bell so you don't miss out on your financial journey. First, let's shatter a huge myth. Investing isn't just for rich people in suits. It's for you, it's for everyone, and it's simpler than you think. The core idea is making your money work for you, instead of you always working for your money. Think of it as planting a money tree that grows over time. So, where do you start when you have $0? You start with a budget. You need to know exactly where your money is going each and every month. Once you have a budget, you can find small leaks. Maybe it's a few coffees a week or a subscription you don't use. That's your first investment cash. This isn't about sacrificing everything you love. It's about being intentional. Finding just $25 or $50 a month is a powerful first step toward building wealth. Now, let's talk about the most powerful force in finance. Albert Einstein supposedly called it the eighth wonder of the world. It's that important. Imagine a small snowball rolling down a hill. As it rolls, it picks up more snow, getting bigger and bigger, faster and faster. That is exactly what compounding does. Your money earns interest, and then that interest starts earning its own interest. This is how small, consistent investments can explode into massive wealth over the long term. But before you invest a single penny, you need an emergency fund. This is 3 to 6 months of living expenses saved in a simple, accessible savings account. This fund is your financial safety net. It prevents you from having to sell your investments at a bad time if an unexpected expense like a car repair pops up. Okay, safety net is in place. Where does the investment money actually go? It goes into something called a brokerage account. Think of it as a bank for investments. Opening one is incredibly easy. Many apps let you open an account right from your phone in just a few minutes with no minimum deposit, which is perfect for us. Now, what do you buy inside this account? The choices can seem overwhelming. Stocks, bonds, mutual funds, it's a lot, but we can keep it incredibly simple. For absolute beginners, one of the best places to start is with an S&P 500 index fund. This isn't financial advice, but a very common and effective strategy. An index fund lets you buy a tiny piece of many of the biggest, most successful companies all at once. For example, the S&P 500 includes 500 top US companies. This automatically diversifies your investment. Instead of betting on one company to succeed, you are betting on the entire American economy to grow over the long run, which it historically has. This approach is called passive investing. You are not trying to outsmart the market or pick winning stocks. You're simply aiming to match the market's performance over time. It's a proven strategy used by legendary investors like Warren Buffett, who has recommended it for the average person looking to build wealth consistently and safely over many years. Let's talk about risk. All investing involves some level of risk. The market goes up and down, and that is a completely normal part of the process. Your job as a new investor is not to avoid risk, but to manage it. Investing in a diversified index fund is a great way to manage that risk. The key is your mindset. You must think long-term. We are not day trading or trying to get rich quick. We are building sustainable wealth over years, not days. So your first goal isn't to make $1 million. Your first goal is to simply get started. Open the account and make that very first small deposit, even if it's just $20. The act of starting creates momentum. It makes you an investor and shifts your entire financial identity in a powerful and positive way. Remember, every expert was once a beginner. They all started from zero just like you. The only difference is that they took that first crucial initial step forward on their journey. Don't get paralyzed by analysis. You don't need to know everything to start. You just need to know enough to take the next simple step forward on your journey. So let's recap the plan. Create a budget to find extra cash. Build a small emergency fund. Open a brokerage account and make your first tiny investment. This is the foundation. It's the concrete slab on which your entire financial future will be built. Get this part right and you are already ahead of most people. Welcome to part 2. You've built your foundation and now it's time to build the house. Let's talk about turning those first few dollars into your first $10,000. The key strategy here is consistency. We'll use a technique called dollar cost averaging. It sounds complicated, but the concept is incredibly simple and powerful for new investors. It just means you invest a fixed amount of money at regular intervals, like $50 every single month, no matter what the market is currently doing that day. When the market is high, your $50 buys fewer shares. When the market is low, that same $50 buys you more shares. It's like a sale. This removes emotion from investing. You don't have to worry about timing the market, which is nearly impossible to do successfully. You just stick to your consistent plan. Your only job is to automate it. Set up an automatic transfer from your bank to your brokerage account every single payday. Set it and forget it. That's it. Let's do some simple math. To get to $10,000, you need a plan. If you invest $200 a month, you would have over $10,000 in about 4 years. But what if you can't afford that much? Start smaller. Investing just $100 a month gets you to that same $10,000 goal in about 7 years, thanks to growth. The amount isn't as important as the habit. The habit of consistently paying yourself first and investing for your future is what truly builds incredible long-term wealth. Now, what happens when the market crashes? Because it will. It's not a matter of if, but when. New investors often panic and sell everything at a loss. This is the biggest mistake you can make. When the market is down, remember your plan. You are buying more shares on sale. It's a massive opportunity for you. Think of market downturns as a gift for long-term investors. Your consistent investments are now working harder for you, buying up assets at a major discount. The real money is made by staying invested through the tough times. Patience and discipline are your superpowers. Don't let fear dictate your financial decisions or your future. As you get more comfortable, you can start looking for ways to increase your investment amount. Can you get a small raise or start a simple side hustle? Even an extra $50 a month dramatically speeds up your journey to that first $10,000 milestone. Small changes make a huge difference over a long period. Another beginner mistake is constantly checking your portfolio. Watching it go up and down every day will only cause you stress and lead to bad emotional decisions. Check it once a month or even once a quarter. Your strategy is long-term. What happens day to day is just noise. Focus on the big picture and your consistent contributions. As you grow, continue your education. Read books, watch videos, and learn more about personal finance. The more you learn, the more confident you will become as an investor. But never forget the simple principles that got you started. Live below your means, invest consistently, stay diversified, and always think about the long-term game. The journey from $0 to $10,000 is the hardest part. It requires the most discipline and faith because the initial growth feels so incredibly slow at first. But once you cross that milestone, the magic of compounding really starts to take over. Your money starts to generate real, noticeable earnings all on its own. Getting to your second $10,000 will be much faster than the first, and the journey to $100,000 and beyond becomes easier from there. It all starts with this plan. It's not a get-rich-quick scheme. It is a get-rich-slowly and surely plan that has been proven to work time and time again. You now have the knowledge, you have the exact roadmap. The only thing missing is your action. The power to change your financial life is in your hands right now. Don't wait for the perfect time to start. The perfect time was yesterday. The next best time is today. Take that first step as soon as this video ends. You are capable of building a secure financial future. It doesn't matter where you're starting from. It only matters that you finally decide to begin the journey. This isn't just about money. It's about freedom. It's about having choices and reducing financial stress. It's about building a better life for you and your family. Your financial future isn't built in a day. It's built with every single dollar you decide to invest, starting with the very first one. If this helped you, share it with a friend and comment below with your first investing goal. Let's grow together at Simple Stroke Official.